Dear friends, welcome to weekly view on markets. Weekly highlight was Union budget, vote on account budget presented by Finance Minister. Markets reacted positively to the budget announcements, and Nifty and all other indices gained more than 2% for this week. Banks, financials, and broader markets outperformed Nifty during this week. Mid cap and small cap indices are trading at all time high. Lot of companies in mid and small cap space announced their quarterly results, and the quarterly results were exceeding the street expectations. On the back of this, there was a lot of outperformance in mid and small cap sector. Markets show strength on the back of good budget announcement and improving earnings of the companies. This is a good thing for the investors. Let us look at performance of indices during this week. Nifty has closed at 21,853, gained 501 points, that is 2.35% for this week. Bank Nifty gained 2.46%, that is, it gained 1105 points, closed at 45,970. Mid cap sector gained 2.69%, that it gained 1,268 points, closed at 48,477. Small cap index gained about 868 points, that is a gain of more than 5% and closed at 16,277. India VIX, that is the volatility index, has gained more than 5% and is at 14.69, and volatility X gone up by 0.82. So market has become more volatile. So we'll see more intraday swings and volatility in the market. Now let us look at sectoral performances. Most of the sectors have gained during this week. Only two sectors, that is, media has lost about 1.11%. Information technology has lost 0.64%. All other sectors have gained. They have reacted very positively to the union budget. PSU banks led the rally with gaining more than 11%. Oil and gas sector, which was a laggard for last 1.5 years, has gained more than 9% during this week. Energy sector gained more than 8%. PSU stocks are in favor for last 2 years, and the rally continues. They have gained more than 8% during this week. Commodities have gained more than 4.4%. Metals, autos all gained more than 4%. Real estate stocks gained around 4%. Infrastructure, manufacturing, healthcare, pharma all gained 2 to 3% during this week. So there is a broad-based rally, and market was very happy with the budget announcements. Now let us look at technicals of the market. This is the daily chart of Nifty. We can see on the chart that it has come above the support level. Nifty had fallen below the support level, that is 21,600. It has come above that, and now it is trying to cross the resistance band of around 21,800. So Nifty has closed at 21,853. But if we look at the last candle, we can see that it is showing a very high projection on the upper side. That means on Friday, Nifty closed about 22,000, opened at about 22,000 and finally closed below that. We see that at higher levels, selling pressure is there or profit booking is there. But now we are at the higher end of this band, which is shown by two lines on the chart. And if Nifty crosses 22,000, then technically we can see further gains in Nifty. This is a chart of Nifty mid cap index. Mid cap index had briefly fallen below the long term trend line which I had drawn, and now it has pulled back above the trend line. It is closing at almost at the highest level. It is almost trading at a lifetime high, and the chart shows lot of strength, and lot of mid cap companies are announcing good quarterly results. So on the back of good earnings from the companies, the rally in mid cap is likely to continue. That is what is the technical view. This is the chart of Nifty small cap index. Small cap index is also trading at a lifetime high, and we can see the rally in small cap index is very sharp during this week. It has gained more than 9% during this week. So whether this rally will continue, the rally may continue, or we may see some kind of consolidation in the coming week in Nifty small cap index. This is the chart of Bank Nifty index. Bank Nifty index has got strong resistance at around 47,200 levels. The line which I have drawn shows the resistance line. Now it had fallen below the resistance line. From there, after the budget announcement, the Nifty Bank has shown good rally. It has gained more than 2%. But for the technical view to be positive, it has to close above 47,200. After that, there will be a lot of strength in Bank Nifty index, and we'll see finally by a Bank Nifty index moving towards 48,500. Now let us look at some of the budget highlights. Vote on account budget was presented on 1st February by Finance Minister. While lot of figures and analysis has been done on the budget by various TV channels, I am trying to give an analysis of the budget from an investor's point of view. How to do investment based on the budget announcement. So the hallmark of the budget was fiscal consolidation path announced by the finance minister. This being a election year, market was fearing that there may be a lot of freebies given out in the budget, which has not happened. So market is very happy with the budget announcement and fiscal consolidation map given by the finance minister. Second good thing in the budget is that there were no changes in any of the tax, including the short-term capital gain and long-term capital gain. Market always has a worry about the taxation on short-term capital gain and long-term capital gain before the budget. Since there was no changes, market is happy with this. Finance Minister has announced a lot of things to control inflation. So stock market is always worried about inflation numbers. If the inflation goes high, stock market will correct. So since finance minister has paid a lot of attention to controlling inflation in the coming months and years, this gives a lot of confidence to the market. Market is happy with the inflation control measures by the government. Another good thing in the budget for investors is the continuing government capex spending. Government is going to do a lot of capital expenditure on infrastructure projects in various sectors. that is giving boost to lots of sectors. So this is a good thing for infrastructure companies, capital intensive companies, and this expenditure in infrastructure will help to create a lot of jobs, and also the corporate profits will go up, which were the companies which are involved in construction and infrastructure. Their business will go up, their profits are expected to go up. That is why market is happy with this. Then government has a lot of focus on innovation and research, including the digital push. So these all emerging new sectors will get lot of government support. Lot of investments will come into this innovation and research sectors. So that is why market is happy with this announcement. There is a boost for various sectors like housing and microfinance, tourism sector, railways and construction of rail projects, renewable energy sector, and defense production. These various sectors have been given specific boost in the budget. This will also increase government capex spending in these sectors. So the investors can look at choosing good companies from these sectors. Stock market gave positive reaction. We have seen good rally after the budget announcement. Because government announced fiscal consolidation, they have announced that they are going to reduce government borrowing slowly in the coming years, and government will stick to the fiscal consolidation back. That fiscal consolidation means they will keep reducing the government borrowing, government loan. Government takes loan every year. The loan quantity of loan taken by the government will be reducing. That is what is called fiscal consolidation. So when this government borrowing has been announced, bond yields have dropped from 7.14 to 7.06 actually. Since the bond yields are dropping after the announcement by the government in the budget that they will stick to the fiscal consolidation map, it is a good time for investors to invest in debt mutual funds. And when bond yields drop, debt mutual funds will give higher returns. Now let us look at some of the macroeconomic fundamentals. USD INR rate is at 82.92. So rupee has strengthened by a few paise after the budget announcement during this week. Dollar index is at 103.8. Brent crude price is at 79.24 per barrel. It had hit around 82 levels. After that, it has slightly come down. Gold price is at 63,200 for 10 gram 24 carat. FIs have continued to sell. They have sold 2010 crores during this week. On few days, they have bought after the budget, but overall for the week, they are net sellers. But DIIs have bought on every single day during this week. They have invested more than 10,100 crore into equity in this week. GST collections for January 24 has come at 1.72 lakh crore. This is one of the highest monthly GST collections. So both direct tax and indirect tax government revenues are growing at a fast pace of around 15 to 16%. So on the back of growing government revenue, government is at a comfortable position to stick to the fiscal consolidation. The auto sales for the month of January 24 is come, and while passenger vehicle sales, that is two wheelers and cars, have shown good positive growth, but commercial vehicle sales, which consists of medium and heavy vehicles, that is trucks, and also the tractor sales are subdued. They are flat to negative, so which is a cause for concern because the industry demands is shown by sales of trucks, and agriculture demand is shown by the sales of tractors. This is where the numbers are subdued, which is a cause for little concern. And among the autos, the premium bikes and SUVs sales are, these sectors are driving the auto sales. The overall sentiment in the market remains bullish. It is a buy on dip market. Buy on dips approach is advised to investors. Mutual fund investors should invest through SIPs, as SIP takes care of the day-to-day volatility. As I have told earlier, the volatility index, that is India VIX, is moving up. Now it is above 14. That means we will see a lot of volatility in the markets. Even though overall direction of the market is up, we will see a lot of intermediate corrections, one day up, one day down, or intraday up, down. All these things we will see. That is called the volatility in the market. So long-term investors should not worry about the day-to-day volatility. They should remain invested and they will get very good profit. Stock investors should look for good quality companies in the sectors which I have discussed in the budget discussion. So those are the sectors, and in that you have to select quality companies and remain invested for long term. These sectors are going to shine in the coming years, and investors will get very good return. So this is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can ask your questions. We'll meet again next week. Thank you.